Mohammed Paracha, the head of Middle East and Africa for Islamic Finance for law firm Norton Rose, and he's a pioneer of Islamic finance globally. He's also on a mission to help Muslims grow financially in an ethical manner with Nester. Tune in to hear about the past, present and future of Islamic finance.
One of the earlier projects that I worked on was actually Islamic Bank of Britain. I helped set up that bank. To this day, if you open an account, you're going to see my drafting. Those terms and conditions were drafted from my kitchen table. I was quite inquisitive as a young person. One of the things that I had been doing off my own back, actually writing to banks and trying to educate them on Islamic finance. Because I was thinking, down the road I'm going to need a house. So how do I buy a house? I can't take riba. When we have that understanding of banking as no alternative but to store our money in a bank, we then have to buy into the way in which banking works, which is how cheaply can I get money from this consumer because I want to try and on-lend that money to someone else at a higher rate.
Islamic mortgages, people are still saying to this day that's the same as interest.
You can understand the skepticism. There's a huge education need. And maybe it's easy for me to say this having been in the industry for nearly 25 years now. I think.
Welcome to another episode of the I Love Monday podcast. Today we have Mohammed Paracha, who has travelled all the way from Dubai, not for us, for the Nester Gala, as he's the co-founder of Nester, and he's also the head of the Middle East and Africa for one of the largest law firms in the world, Norton Rose. Welcome to the podcast.
Thank you very much. Nice to be here. Of course, I've travelled here just to see you, though.
Oh, yeah, we can say that. We'll cut the other part out.
Yes.
So Umar Khalil was the one who introduced us, and when he introduced me, and I just did a quick Google search, you came up as head of Middle East and Africa, and I was like, this is a high position for a very high law firm. Did you always want to be a lawyer?
Yeah, that's an interesting question. I think like most people that go through the UK sort of system, you have some ideas on what you want to do. You know, people who want to go into law, medicine, they kind of have an early inclination that they are, that way inclined. And I think for me, I probably did know when I was doing my sort of A-levels and leading up to that law would be a profession. I think that's probably, if I look back at the things that I was doing, writing letters to companies, being a pain in the neck, generally, including when it came to writing to banks and talking to them about Islamic finance when it wasn't even a thing. Looking back in hindsight, I probably can see the path that I was going down. But if you ask me, how did I become a lawyer? How did I do a law degree? That kind of all just happened. I don't think there was a conscious decision on my part to choose the law. It was kind of just a natural process. I mean, when I was at school doing A-levels, I think we used to have something called a Moresby profile. I don't know if it exists anymore, but it was kind of like a psychometric analysis. You filled in lots of questions and it would come back effectively with the choice of career that you could go based upon your answers. And so I remember doing that as an A-level student, and lo and behold, one of the top hits was you should become a solicitor, you should be a lawyer. And the rest kind of just fell into place. There wasn't really a process where I thought, well, let me apply to do this variant in terms of degree. It was straight law, and the rest kind of just fell into place.
So before you decided on law, or before your A-levels, maybe in your early years in secondary school, what did you actually want to become?
There's no exciting answers. There's nothing like an astronaut or a policeman or fireman or whatever. It was just a process. And I think the way that we were brought up was, my parents my father has passed away now, but my parents at the time were, working parents. And so we kind of were just encouraged to do as well as we could at school. And that's kind of the upbringing that we had, in our community. And, we didn't even have a masjid growing up in our community. So we were part of that sort of effort in creating that sort of infrastructure that now is thriving in our town where I'm from. But, there wasn't really a path. It was just, do the best you can. The A-levels were chosen. And then the closest that I can link it to in terms of why I chose a law degree was that Moresby profile, which said you should become a lawyer. And I thought, well, that's probably a good thing. Asian parents wanted all their, kids to be doctors.
Lawyer, doctor, accountant.
And it kind of fell into place. And there was no lawyer in the family. There was no one that actually had gone to university. So it was, from my parents' perspective, I suspect it was one of those three things: engineer, lawyer, and doctor, and they were very happy.
Going back to your community, So I'm from Forest Gate, where you know as well, it's a very thriving Muslim East London community. You mentioned you didn't have much of a community back then. You didn't have a masjid. How was it growing up in Kent, where you were brought up?
So I grew up in a town called Tunbridge Wells, which is very famous because you often see the headlines disgusted of Tunbridge Wells. You know, the average impression of someone from Tunbridge Wells is they're quite a posh person that writes about the wrongs that they see around them. It's far from that now, because obviously it's a very cosmopolitan, mixed culture, thriving town. But I grew up in the 80s and 90s and early 2000s before I left to go to the Middle East. And when I was at school, in my school, I was probably the only Muslim in that school. And I found it to be quite a challenging environment, because obviously you are surrounded by people who are not like you. But I used that as an opportunity personally to thrive. And at the time, it didn't really mean anything to me. That there was definitely situations where you look back and ask yourself, were you treated fairly? And that's with the benefit of hindsight. But at the time, growing up in that environment and going to the local school, it was fine. There was no sort of reason not to be yourself. And I actually, alhamdulillah, was quite fortunate to be in a grammar school environment. And within that school environment, it was merit driven. So I worked hard. I actually became head boy for the school. So it was quite a good time for me in that, I had that unique experience of, in sixth form leading, the sixth form as sort of head boy. But I think nowadays it's much more mixed. There's lots of Muslims. It's a very deep cultural sort of town. But growing up, we didn't have regular Quran classes. We had to import an imam from East London who would come down on the train on a Saturday morning. My father and I would go to the station and pick him up. We would then drive to what would effectively be a church hall kind of setup, where some of us would effectively gather and we would do our Islamic education, our maktab. And that was how we grew up. It was that kind of environment. There were literally a handful of us. And the community we were probably one of the few Pakistani families there, with most of the other people being from sort of Bangladesh. Definitely were not any Gujaratis. We definitely didn't have many Arabs or any other any nationalities. That all came later. And my memory of growing up was very much doing that on a Saturday, but there being no other Islamic system around us. There was no masjid to go to. That all came later. That came sort of mid-90s for me, where effectively my father was one of the people that was instrumental in building the masjid, and so he was one of the founding sort of elders, you could say. And so I was very fortunate to be under his wing really as a teenager, because Allah connected me with his house very early on. And coming back to your earlier question about being a lawyer, I think probably the seeds were sown then, because I ended up drafting the constitution for what became the masjid, and I was probably only 15 or 16 at the time, and I was calling different established mosques like East London Mosque and asking them for copies of their constitution, and I'm sure I called Regent's Park Masjid and many others, and cobbling together this legal document that then was submitted to the Charity Commission, which then gave life to the masjid. So there are seeds that you look back at it and you ask yourself, okay, how did you become a lawyer? And you see things that you did which kind of were not things that people that are going into engineering or medicine or non-legal roles would naturally do, and yet I found that I was doing them. And so that's kind of the environment that I grew up in. And I saw my dad and the elders buying the building, establishing the mosque, which was a disused pub, which was quite exciting. And now, mashallah, it's a thriving community with a second masjid in the neighbouring town and lots of children going through the maktab system.
Are you still involved with that community? Because obviously you haven't been here for 20 plus years, or maybe 20 years, but you have family there. So are you still involved?
Yes, I am quite involved. So, not on a day-to-day basis, but we've just recently established a masjid in the neighbouring town, and I've been quite heavily involved in that process as well. So we've now sort of grown out of Tunbridge Wells into Tunbridge, which is the adjacent town, and there was a need, so we kind of did what our fathers were doing, back in the day.
How far is Eastbourne from Tunbridge Wells?
Probably about an hour away.
Okay, the only memory I have of Tunbridge Wells is we stopped in Tunbridge Wells to pray Salah on the way to Eastbourne, and it was just some random greenery on the side of a dual carriageway. That's the only time I can remember being in Tunbridge Wells.
Yeah, no, it's a nice place. I mean, it's not too far. It's about an hour away from here.
Yeah, it's not far. So going back to the law side, so you're in Islamic finance and banking law, is that correct? When did you decide that was the sector you want to work in?
So there's an interesting story there, or at least I think it's interesting, because when I started out, I actually started practicing law on the High Street in Tunbridge Wells, and my local firm was a firm that specialised in criminal law and prison law and divorces and all of those sort of high street things that are needed from your local solicitor. So I was at that kind of sort of provincial law firm, going into Wandsworth prison, Belmarsh, and all sorts of other places, Brixton, and my conversations were with effectively criminals who had done some very bad things, and that's the direction that I had spent probably my first year as a trainee solicitor doing that kind of law. I think I alluded to this in one of my other replies, that I was quite inquisitive as a young person. And one of the things that I had been doing off my own back had been actually writing to banks and trying to educate them on Islamic finance. And I had a very selfish reason for doing that, because I was thinking down the road I'm going to need a house. So how do I buy a house? I can't take riba, I can't do an interest-based mortgage, I have to do an Islamic financing solution. So I remember, again, I was probably 16, 17 years old, it was probably no more than that, writing to banks. And this was the likes of Abbey National, Barclays, and Highstreet Banks like NatWest, and effectively randomly contacting them and trying to educate them on Islamic finance product, and getting responses sometimes, other times, of course, no responses would come back. And sort of in that environment of trying my hand in this area called Islamic finance, which was yet to be a discrete thing. It was not a thing at all in London. It wasn't actually a thing anywhere around the world, I would say, about 25 years ago, other than the Muslim world in certain places like Egypt and
So this was
Dubai.
around the year 2000?
This was late 90s, early 2000s we're talking about. And so that's kind of the environment that I was in. And as a young lawyer, we get sort of, or we used to get something called the Law Society Gazette, which was a publication that came out from the Law Society every month, in which you would see all the stories about your profession and different firms. And I remember very distinctly, and I probably have got it somewhere in the attic, an article written by a couple of partners from Norton Rose. And in that article, they were talking about the Middle East, and they had an office in Bahrain, which is where I eventually moved, and they talked about Islamic finance. And it resonated with some of the things that I was doing. So I used the same strategy, which was to cold call this law firm. I'd been cold calling the banks, not getting anywhere, and had this as a bit of a pet project. So I thought, okay, Islamic finance, I didn't realize that was a thing. Let me do some research around the industry and what exactly that's all about. I had no idea about banking law. I was in an environment where I was going in and sitting next to people who had, effectively murdered people or had stolen from them, and that was the direction of travel that I was going down. So I wrote a letter into these two partners, one of which was the chairman of the firm. So I've got this interest in Islamic finance, and I've been reading around the subject, and before I know it, I get a letter. And they said, come in for an interview. And the story essentially was, I went in for an interview and I transferred my training contract. You have to do 2 years training to qualify, into Norton Rose. And so overnight, you could say I became a city lawyer. And in hindsight, that was quite a strange way in which you join a law firm. You don't normally join a law firm in that way, but rizq is written by Allah, so that was the way that my path was written. And I ended up doing my second year as a trainee solicitor in the team that effectively became the leading team in the world for Islamic finance. And in that team I was doing transactions that I couldn't even dreamt of. They were obviously working for high street names who I had no idea would have an interest in an Islamic finance contract. But you're also working for companies that you would see in the newspaper. So it was a very sharp contrast to going into Belmarsh prison.
Yeah.
I was catching a train into effectively London Bridge and walking into the Square Mile and learning about the world of high finance. And that's how I joined Norton Rose. I effectively came into the firm as a trainee solicitor through a slightly unconventional path compared to how students of law now would go into a city law firm. And because the role was being invented, I found myself in the right place at the right time.
So you were educating banks about Islamic finance. What kind of things were you mentioning to them?
So at that stage, I didn't know anything. At that stage, it would be how I would describe a cheeky person who has just done a Google search and knew a few Arabic words and what they'd roughly translated to. That's what I did. I remember vividly sitting on the train going to London with printouts, going to my interview, and having had no experience other than the research that I'd done, desktop research. So I talked about certain types of Islamic financing contracts. What they really wanted was a young person who was willing to learn. And I think that's the main message that I would give to young aspiring solicitors, lawyers today. You've got to have that technical knowledge, but really an employer wants to have people who are ready and willing to learn, because the world is complicated. You're not going to know everything. And so there was no point me talking to them about criminal law. That's not something that any city law firm does. And I just rattled out a few phrases to show that I had a remote knowledge of Islamic finance, and sat their interview, and before I knew it, they offered me the contract.
Did you move to Bahrain straight away?
No, I was in London for 5 years as a young associate. So I qualified as a newly qualified. After the 2-year process, you then qualify. And I worked in the city for about 5 years. And it was during that time that I was effectively, I would say, what I still consider to be that golden era of Islamic finance. Because whereas when you're now doing Islamic finance, you have a well-established set of documents, precedents, you know what you're doing. People can pick up a transaction and say, oh, it's like the last one that I did, but there's some changes. Back then, none of that existed. It was, okay, you're doing an Islamic financing. What does that mean? You're sitting down with Sharia scholars on a one-to-one basis. You're sitting with the banker who knows how to do a loan, but doesn't know how to do an Islamic financing. And you're kind of figuring it out together, including with the scholars, because as students of knowledge, of fiqh, you learn, if you've done a classical study, for example, you learn from very early stages in your career. If you are doing a classical course, you will be learning fiqh al-muyassar, for example. You'd be doing an easy fiqh book. You then will graduate to something like Quduri. You'll then be doing something like Hidayah, and you'll get your knowledge. When you graduate from that system as a scholar, you still really don't know how to apply it. You've learned all the classical terminology when it comes to what does murabaha mean, what does ijara mean, what's a musharaka, what's a mudaraba, what's wakala. All of these things you learn in the classical books. But application is not present in any of that course material. Now there are places that obviously do teach that and bring people in like external speakers to make it a bit more relevant. So we kind of found ourselves in that environment where we were sitting down with scholars who are now leading experts in the world, but we were having to help each other to determine this. And my teaching in Islamic finance was over that sort of, well, it's been a lifelong thing, but my crash course, the boot camp for me, was that first 5-year period when I was in London. And frankly, nobody knew how to do Islamic finance. So we would have a client coming to us saying, okay, I want to buy some real estate, or I want to do a development on this real estate. Real estate being, one of the core areas of growth within Islamic finance. And we would say, okay, well, the bank can't just give a loan and charge interest, so what do we do? And so we would sit down with, the scholars, and we'd figure out a way to do it. And the scholars would teach us. They would say, well, in the way that we've learnt this from a fiqhi perspective, from a jurisprudential perspective, is we have the contract of murabaha. So if you're providing the financing, let's buy the property under a contract of murabaha, and let's sell that, let the bank buy it for the sales price, and then why don't we sell that then to the customer, i.e. to the borrower in conventional speak, for a higher amount, the higher amount being the profit or the interest equivalent in the transaction. So we started off in very basic terms around how to structure Islamic financing transactions. And they always say you remember your first transaction. My first transaction was 147A Cromwell Road. It was helping a Kuwaiti investor buy a hotel. And we'd structured it in that way, and there were problems with doing it, which were stamp duty problems, and we'll come to that in a minute. We sometimes then had development. So how do we finance developments? Back in those days, there were no contracts, as I mentioned. So the scholars would come to us, and we'd sit around the table, and they would explain to us how the contract of istisna works, which is a contract of procuring construction and manufacture. And we would structure the transaction around these principles. And one of the takeaways that I have from that time is you really get under the skin of your transaction by having nothing, having a blank sheet of paper and having to figure it out. And that's one of the things that unfortunately we find a bit lacking nowadays, because, as I say, the industry has matured a lot, and youngsters don't necessarily get the opportunity to do that analysis and thinking that we had no choice but to do.
How would you structure the deals? Because obviously you've got the standard conventional method where the whole banking system is run by the interest method. So that even if it's, for example, buying a house or buying a building, you'll get some kind of finance from the bank or bridging finance or whatever it is for development. And then now you've got a blank sheet of paper. You're trying to fund this hotel for the Kuwaitis. How are you structuring it with the whole banking law siding completely against what Islamic finance teaches?
Yeah, it's a very good question. And this was one of the early questions that our elders within the scholarly community had to ask themselves. They had to say, do we wait for there to be a perfect system, a utopia, if you like, and create product in that perfect system? Or do we work with what we have? And if you think back to 20 years ago, when maybe even longer than that, when the elder scholars had to think about these things, I'd love to sit down and have a conversation with them as well. And I would encourage you to try and speak to one of the scholars from that era if you can find one. But they had a really tough time, because they could have taken that decision, which was, okay, it's not a perfect system that we're working in, so let's wait until there is a perfect system. But in doing that, they would be effectively, indirectly, not allowing, but putting people in a situation where the only alternative for them would be an interest-based product. So what they had to do, and it was a different era to now, so we can't look at it through the lens, we can look at it through hindsight, but we can't look at it in the context of how we see the industry now. Back then there was nothing. They had to make that call, and Allah guided them. I'm sure there was lots of discussion amongst that community on how do we get involved? Do we get involved? Do we start this? And they made that decision, that courageous decision that, look, we have to work within the banking system. It's something that we have to not embrace, but we have to recognize that if we're to try and create solutions for everyday people and businesses and whatnot, then we're going to have to work with that system. And so what they did was they didn't ask themselves the question, how is the bank getting the money? They knew that the bank was getting its money from an interest-based system. What they focused on was, let's try to get the product that's going out to the customer, whether that's someone buying a house, someone funding a business, or an airline buying an aircraft, whatever it may be, let's focus on that product being compatible with fiqh. And that's the call that they had to make. Very difficult decision, and very difficult for us in 2024 to look back without the knowledge of the last 20-25 years and understand that position that they were in. But they made that decision, and that was a difficult decision that they made. And the result of that is still being debated. People do talk about that, but the people that often talk about it don't appreciate the difficulties that they were in when they were making that decision. And so we found ourselves in a situation where they created product because there was nothing. And they decided that there had to be a stepping stone in a direction rather than waiting for there to be an ideal.
The way I see it is you can't go directly from darkness into light. It's not a switch of a button. It's more of a sunrise. And slowly it gets lighter and lighter. But for you to go directly from conventional into Islamic finance without there being no overlap in a system, in the Western banking system, there has to be some element of darkness which remains, and then over time it kind of cleanses itself out. Because when, I think in the UK, was it Islamic Bank of Britain, maybe in 2000, 2001, before it was renamed to Al Rayyan, the Islamic finance came out. It used to be bank accounts, and then it used to be profit rate. And I remember I was probably young, 14, 15-year-old. One of my friends actually worked in the East Ham branch. And he said, no, just open your account and you get a profit rate. And at that time, it's like, okay, cool, whatever, I get a profit. But as you're speaking to other people, people are saying, well, that's the same as interest. And it's like, is it? Is it not? We don't know, we're not educated. And the same happened with the conventional, the Islamic mortgages. People are still saying to this day, that's the same as interest.
Yeah.
So how do you educate people around this?
So first of all, there's a huge education need. And as an industry, particularly when it comes to consumers, less so when it comes to businesses, there's been a lacking of education and enough importance given to educate our children on finance, period. We haven't got enough knowledge in terms of financial affairs as a community, as Muslims in the UK, let alone Islamic finance. So you can understand the skepticism. I think the bottom line is, and it comes to our capacity for understanding, and maybe it's easy for me to say this having been in the industry for nearly 25 years now. I think we have to recognize that there are some things that perhaps we have to also defer to scholars and those that are more learned than us. So we may not understand 100% why something is structured in a certain way, and it may be easy for us to say, well, it's just the same. But that's where we have to embrace maybe concepts of taqleed, where you have to recognize that there's someone who is qualified that has looked at the product, as long as those individuals are reputable Sharia scholars and they are known in the industry for not only fiqh from a personal law perspective, but also have economic knowledge, because the two are required. As long as they've got that background and they say certain things, I think there should be more of an acceptance in just going with the flow, because ultimately we don't know everything. I don't know the detail in every single aspect of fiqh. I can't, because I'm not a scholar, I'm not a mufti, I don't have that knowledge, but I have to rely upon someone who does have that knowledge, and I have to then accept what they say, in terms of my affairs. And I think a lot of the criticism that I see comes because maybe we've moved away from, trusting people. And I accept that, because there have been horror stories as well where people have trusted the wrong people and they've ended up entering into transactions which are not Sharia compliant. One of the earlier projects that I worked on was actually Islamic Bank of Britain. I helped set up that bank. To this day, if you open an account at Islamic Bank of Britain, you're going to see my drafting. Those terms and conditions were drafted from my kitchen table. So I know, the example that you give, and I know the history behind the products that they offered. And obviously now they are different. They're now Al Rayyan UK, and they've maybe changed direction in terms of their business. But the fundamentals of Islamic finance are understood by the scholars, and the organizations, I think, do need to do much better in explaining why they are different. So for example, if you talk about financing products, it's very easy for you to say to a customer that a financing product will be loan-based if you go to a conventional bank, so you borrow money. It's very difficult for you to explain how the equivalent product works in an Islamic financing to somebody who hasn't grown up with that terminology of interest rates, APR, and all the things that we absorb as youngsters just by osmosis, by living in a country that is in where banking is thrown at you, where there's you kind of understand loans and banking just without having heard anything about it. You don't go and learn about a loan. You know what the word loan means through just general usage. So imagine the challenge there is where you then are encountering a completely different product, your natural instinct is going to be, well, I'm paying the same amount of money as a loan, without necessarily digging deep to understand that there are differences. There's an asset involved. The bank is buying the asset and renting it to you, or co-owning the asset. We tend to focus on what the return is, whether rightly or wrongly. And I think that's just a natural human response, because people naturally, if they don't know the subject matter in detail, will draw that comparison.
I want to speak about a few products. Okay, so firstly, we've got the savings account. So in a conventional bank, you put £100 in, you get 1%, 2%, 3% interest. An Islamic banking account, you put £100 in, you get 1%, 2%, 3%, 4% profit. What's the difference?
Yeah. So the profit clearly is not different to the interest. So that's the first thing.
Yeah.
But the way that a bank operates a savings account is either to use the principles of mudaraba or the principles of wakala. Now, I would remind your listeners that in giving the answer, you have to concentrate on the fact that the scholars have looked at that contract with the consumer to make sure that it's Sharia compliant. But this is all within the world of global banking. So I'm not going to get into that sort of discussion, because there are others that have spoken about, whether that's right or wrong. But focusing on your question, the contract of mudaraba, which is the one that typically is used for a savings account, is one where the relationship between you as the depositor and the bank is one of Rabbul Mal and Mudarib. So Rabbul Mal means the owner of capital, and the Mudarib is almost like a manager of those funds, although there's no real direct translation from the Arabic to English of what Mudarib really means. It's not really an agent, it's not really a manager. But the bottom line is, what's happening in that arrangement is you're saying, I've got an amount of money that I want to invest, and you are giving it to the bank as a Mudarib, as a manager, to invest into something. That could be either unrestricted, or it could be muqayyad, it could be something that's restricted to a certain investment. Typically in a savings account, it's unrestricted, which means that the agreement that you're signing is, I'm giving you my money for you to commingle with the bank's other money, which is from current account holders, its own capital, other sources of funding, and to make a return on that money effectively. And so what they will do with your deposit is they will put it into home finance, they'll put it into car finance, they'll put it into personal finance. They may invest it with other banks on Sharia compliant contracts. But the deal effectively is that whatever the return is that comes back from that activity, the profit on that is going to be shared with you. And so the contract of mudaraba essentially allows you to participate in that banking activity and to share some of that return. Now, what I find objectionable is that you would have thought that the contract of mudaraba will allocate a more fairer division of profit share with a consumer, with a depositor, because if you're investing in the bank's activity, you're taking risk on all of those transactions. But the problem that we find as an industry is that the mudaraba savings accounts are benchmarked to the equivalent high street return from any bank.
Yeah.
So in your example, your 1%, your 2%. So rather than having a ratio of profit of, let's say, 50-50, you give us the deposit, I'll use my expertise to invest it, and we'll split the profit 50-50. What the banks do is they change that ratio of profit to match the rate of return that you'll get in the high street on an interest-based profit. So rather than 50-50, it might be 80-20, it might be 90-10. And that's designed so that you walk away with an economic return which is equivalent to that 2 or 3% that you would make if you put it on an interest-based account. Now, is that right? Is that wrong? That's where fintech has come in and hopefully is correcting some of this by offering product solutions. But that's how a mudaraba account works. It kind of doesn't create a deposit per se. It creates an investment contract where if things go wrong, your money is going to be at risk. You may not receive your so-called deposit, and that's obviously the risk sharing, the profit and loss sharing nature of mudaraba. That's how it works typically in most Muslim countries when they offer a mudaraba account. The other way they can do it is to offer a wakala account. But fundamentally, it's the same principles, except the contract is different. And instead of profit share, they're going to give you a target rate of return. They're going to say, give us your money. We'll act as your investment agent into something that, again, might be the treasury pool of the bank, or it could be something restricted. And they're going to say, we'll give you a target return of 2 or 3%. They won't know they can get 2 or 3%. And you're, again, as a muwakkil, as a principal, you are at the risk of loss if things go wrong. But they will deliver that 2 or 3% if they can. That's the target return. And anything above that, they keep for themselves as an incentive fee. So those are the two ways in which savings account work. And as you can see, the difficulty you have is it going into the bank's activities when the bank is part of global, banking. The less difficult part is the front end, because it is actually following the right fiqhi principles in terms of how a contract of mudaraba should be created, which is, you share, the loss as the Rabbul Mal, unless your mudarib has been grossly negligent or acted in willful default, you are the one that's going to suffer the loss. And there is a profit share, which is the other principle of mudaraba, where you have to agree that ratio of profit at the beginning between yourself as the mudarib and the Rabbul Mal. So all those features are there, so it ticks all the boxes. But is it right that if someone has spent their life earning, money for the rainy day, that they put it into an Islamic deposit, a mudaraba account, and the profit ratio is manipulated so that you only end up with the same return as a high street bank would give you on an interest-bearing savings account? Well, I've got my views on that, as you could probably guess.
But why have they matched it or kept it at a very similar level?
This is part of the, is problem the right word? But it's part of the deal with banking, isn't it? I mean, the relationship that we have as consumers with our banks hasn't really changed in the last 150 years. And we'll get to Nester in a moment, because this is one of the reasons why I've co-founded Nester. But the relationship with banking started where effectively you would plough your fields and you would have grain and you'd want to store that grain, and so you'd go to the manor house and you'd put it into the the grain storage. The manor houses then became the storers of money, and banking developed. The relationship that we've had with the bank is we need to put our money into a bank because we feel that's safe. And when we have that understanding of banking, where we think that we have to, as no alternative, but to store our money in a bank, we then have to buy into the way in which banking works, which is that a bank's relationship with us is very simple. Yes, you'll get your current account, you'll get your credit cards and all of these other services. Those are operational needs. We need those to live our day-to-day lives. But the fundamental relationship from a bank to us is, how cheaply can I get money from this consumer, because I want to try and on-lend that money to someone else at a higher rate, the differential being the profit that I'm going to pay salaries out of and ultimately shareholders as dividend. That's the relationship that we have with banking, modern day banking. So if you think about that relationship for a moment and how a bank looks at us, the model relies upon giving us an interest rate or a rate which is what they think is the least amount possible they can pay us on our savings, because they are wanting to do that arbitrage.
So it's more of a market competition rather than empowering and enabling the Muslim consumers.
So they are not thinking, okay, this is a mudaraba savings account. Someone saved for 10 years to get £10,000. They're saving it up for a wedding or university education. Let's empower that person to make the maximum they can from this banking activity. They are thinking, we need to attract this deposit. We need to attract it at such a rate which then allows us to make X amount more on top of that when we put it all together and lend it out to a business or lend it out to other people. So the fundamental relationship that we have between our money and a bank in modern banking is very different to how obviously an Islamic bank should be structured. But the Islamic banks that are in most countries mirror that because of certain pressures that they face, not only from the boardroom, because their shareholders understand banking and this arbitrage, but also the regulators. We have a system which is very heavily regulated, and this is why Islamic banking is very difficult to actually implement in somewhere like the UK and other markets, even in the Middle East, because when the regulators regulate banks, they have this understanding. It's about taking deposits, it's about using your capital, it's about having regulatory buffers, it's about leveraging your balance sheet. It's not about these principles of mudaraba and wakala, which should be the core of our system.
So if another point that a lot of consumers have is, if we've got the savings account which is matching the interest rates, why are the Islamic mortgage payments considerably higher than, and generally they're 1.52% higher than our high street banks?
And this comes back to my earlier remark, which is it's very difficult to explain something complicated, and why sometimes you just have to rely upon advice that's given. Because in giving this answer, you and I have got the benefit of time where I can explain how banking works. But if you're in the masjid or you're in the shop having a conversation, you can't explain how banking works. Very simply, the providers of product, who are banks, so the likes of Arayan Bank or Gatehouse Bank, if you imagine as a business their balance sheet is going to be relatively small compared to the likes of a high street name like a HSBC or a NatWest or a Barclays Bank. We're talking about hundreds of millions potentially, or maybe low billions, compared to multiples of that within the likes of HSBC. So the liquidity and the cost of funding is going to be much lower the more money you've got in your organization, because you've got economies of scale, you're able to attract deposits at lower rates, and so therefore your products, your customer-facing products, can be priced more aggressively, because as a business it doesn't cost you as much to make that available. We call that a cost of funding rate. Every bank will have its own cost of funding rate. So if you take that and you apply it to a smaller business, just like any business, if you're smaller, you command less purchasing power, less bargaining power. That's exactly what's happening within Islamic banks. So in the Middle East, if you look at the products that are available, for example, in Dubai, we have Dubai Islamic Bank, one of the Emirates' leading Islamic banks. If you compare its pricing to a conventional bank, there's no difference. In fact, we have many non-Muslims taking out car financing products and home financing products from Islamic banks in the Middle East because there's no differential. Their balance sheets are so large that they've eliminated that additional cost in their operation by virtue of their multi-billion-dollar balance sheets. But in the UK, we're very small. And this is why it's been very difficult for banks who have got maybe one product or a limited number of customers to make that product available on a competitive basis. So you've got that 1 or 2% more. But that's an opportunity, because we're now living in an environment which didn't exist 20 years ago when we created these institutions and these products. And the benefit of different regulatory systems that we have in the UK, for example, has allowed us to develop a market known as fintech. And that's, again, reset the dialogue. And I feel that in the UK and other Western markets, we're seeing a bit of a revival, because people have realized that you can have products that are offered to you out of non-banking financial institutions, which are still regulated, but because their cost base is lower, they can be more competitive. And that's the really exciting phase of growth that I see within Islamic finance at the moment.
We're seeing that with companies like Nester, like Wahid, like Fida. We were speaking about them off here, of course, with Nester as well. That a lot of people are now going towards these products. A lot of Muslims are going towards these products because, like you said, they're not the conventional bank, and they market themselves as an investment product. So you automatically know there's a risk of loss. Whereas in the banks, you don't anticipate a loss. When you put £100 in, you expect to see £100 there minimum, if it's not £104 after a year, whatever it is. And then obviously this whole Islamic finance, and you've been in there for a number of years, you decided to co-found Nester with Yunus. What
Yes.
was your vision behind it?
Probably a midlife crisis was the starting point. I think we all have those turning points in our life where we reflect on what we've done. And alhamdulillah, I've been involved in enabling English law, London markets. We have multiples of billions going through London, every day doing Islamic financing, and the number of players that are there, from Highstreet Banks to US banks like Goldman Sachs and JP Morgan, it's all there, and alhamdulillah, it's been great to be part of that. But I think there comes a time when you have to ask yourself some serious questions, and what I found myself doing about 4 years ago was going back to the wish list that we had put together when we were serving on the Bank of England Committee on Islamic Finance, when we kind of created all of this system. And looking at what we had hoped would be created and looking at what we had, it was very clear to me that we hadn't really delivered on the aspirations that we had in creating product and creating effectively opportunities to come out of financial exclusion, which was the whole desire that we had in creating, the Islamic finance enabling system in London. So I call that a midlife crisis. You can call it what you like, but it dawned on me that, look, we've waited for banks for 20 years to get us solutions. The banks haven't been able to deliver the choices that we need. And because I'm in the industry, I don't blame them. I know their pressure points. I know that they have corporate governance issues, they have boardroom considerations, they have to deliver shareholder value. Those are all difficult things by themselves. Take one of them would be a reason why you would fail. Couple that with the fact that we've got a population that does need to be educated. We still have that skepticism, but we also have a huge amount of regulatory oversight when you provide those products through a bank. You touched on something, earlier. When you put £100 into a bank, you know that the government's going to insure that up to £85,000 at the moment against the risk of the bank going bust, essentially. All of those things are understood by me because I'm a banking professional. I've been in the industry now for 25 years, so I get it. But do we wait another 20 or 25 years to try and hope that a bank or others will come up with solutions? And I kind of got to the position where, no, enough's enough. We have to, try and do something ourselves. And if I'm a strong believer, if Allah's given you some skills, you're going to be questioned about it. Why didn't you use that to try and have more of an impactful benefit to people? And so Nester was born out of that. That's why I co-founded Nester. It was basically out of personal frustration that I had a lack of products, that the only product in the UK was a home financing product, which was very limited and more expensive. And it was really drilling down onto what the needs of an average person is going to be. You've got needs for the roof over your head. Well, that was to an extent taken care of with that home financing product. Not perfect, but you've got FIDA and others coming up with fantastic products which are hopefully going to change the landscape there. What else do we need? Well, if you look at the needs of a person, what about the saving side? How do we create solutions where we don't necessarily think of our relationship with a bank in that same way that we have for the last 150 years? Because that's not going to take us out of financial exclusion. All that means is that we're going to have a 0% current account, and year on year we're going to have negative carry because we have to pay 2.5% zakat. So we're starting minus 2.5% already. Do we just wait for that, for a solution to come? And simply speaking, I, together with Yunus, decided, no, we need to do it ourselves, and we need to be in the market creating product. And having spent 20 odd years helping global banks doing Islamic finance, it was a very simple business decision on my part, because it was taking that global best practice, and in this ever shrinking world that we are in, it was applying that at a community level. And I think that's what we needed. We needed to actually try and find a way where we could take all of that great stuff that happens in multiple of hundreds of millions of dollars Islamic finance transactions and find a way to get the benefit of that into everyone's household. That's difficult, but what's enabled us to do that has been fintech, and particularly the way in which the regulator has looked at giving an alternative non-banking regulatory environment for fintechs. And that's quite a critical thing, because I think as a consumer, you do have that reassurance that when you put the £100 in the bank, you're going to get it back because there's an insurance scheme. There are regulated and unregulated fintechs. And of course, Nester is a regulated fintech. And so it's important when looking at these alternatives to make sure that you go to regulated alternatives, because at least that way you know that there's a financial policeman looking at your product and giving you some assurance. So that's just something that I think is quite important.
What exactly is Nester? So if there's a consumer who's looking at halal savings products, Nester is one that comes up. What is it? What does it do for them?
Yeah. So what Nester does is focuses on the saving side, on the investment side only. So it's about how do we get return into our pocket from the money that we've earned, which might be sitting in a bank account or sitting somewhere not doing very much. That's what Nester is all about. And what Nester does is recognize that a business has to make money. So we have customers who are family offices, high net worth individuals, as well as retail customers, including, because we are the only Sharia compliant IFISA, we also have customers who are non-Muslim, who just want tax-free earnings through the ISA product. So we have different customers. But at the heart of what we do, we effectively say we're going to invest people's money into secured financing transactions. So taking the backbone of any economy is the commercial SME sector, and so we've focused very much on creating a product which pushes Sharia compliant debt out the door to fund the development of commercial SME property assets. That's our first product. So put very simply, we've taken a product that is used in bank grade lending, known as real estate financing, and we've made that accessible to the average person. And so on the one hand, we have customers who need finance. So that's your property developer who maybe is doing an HMO conversion, has maybe a high street buy-to-let, maybe is buying a property that's dilapidated and wants to renovate it and flip it on. That's one of our customers. And on the other side, we have investors who are, as I said, family offices, high net worth individuals, retail customers, who we bring into those transactions as if they were the lender. And in the middle, Nester is basically doing all of the credit analysis, holding all the security, and effectively getting the return to investors that we've let the banks get in that other relationship that I've described.
Yeah.
And so it's about disrupting the way that we think about banking. It's about making our money get the same return that the bank is generating for itself, but by effectively eliminating the bank from that relationship and taking that control ourselves. That's what Nester does essentially at the heart. And so it's a disruption to banking essentially, and it's effectively bypassing banking and saying you can come directly into that asset class where if things go wrong, you still have got the bricks and mortar building as security. You might not have the £85,000 insurance that you get with a deposit, but you've potentially got the asset there. If things go wrong, we can sell the asset and get everyone's money back. So it's looking at things slightly differently, using the power of fintech, using the power of financial technology and reducing cost, and actually getting the lion's share of the return out to the retail customers. So that's what Nester is.
So you can have property developers come to you as well for finance. Do they come directly to you or via a third party?
Brokers or directly.
Okay.
Yeah.
And then the consumer puts in the £100 or £1,000, whatever your minimum is, and then they will get the return. Do they get to select the properties as well?
Absolutely. So through the website or the app,
transparent.
Fully transparent, you basically decide what you want to invest in. So if you're interested in a short-term 12-month investment, you would do a bridge financing transaction. If you want to take something a bit longer term, you might do a 3-year transaction, which is paying a lower rate but carries a different risk profile because maybe there's a commercial property with a shop at the bottom, like a buy-to-let asset. So you build all that up yourself and you decide how much of a position you want to have in each of those transactions. And effectively what you're doing is building up your own fixed income portfolio.
How much has Nester raised so far in finance?
So in terms of total financing at the moment, so I'm not in the day-to-day management as a co-founder, but it's around about £30 million.
And that's over 4 years?
Over 2 years.
Over 2 years?
Yeah.
And what's your goal? How much do you want Nester to be able to raise?
So Nester is a business that has to serve our community indefinitely. And so there is no upper limit. You imagine building a bank building its balance sheet of total assets. It just goes more and more. That's what Nester has to do. It has to become a business that just continues to grow out its first product, but then what's product number two? Product number two may be a mezzanine financing where you're taking a different position. It may be creating totally different products around different asset classes. Maybe there'll be a leasing fund in there. Lots of different things may emerge, but that first product, which is our main product that we've launched with, is, for us, we're still in our infancy. And I know that the management team is trying to grow that as much as they can this year, and year on year they want to see that book growing.
So have you had any challenges in terms of pushbacks from consumers or even property developers or property investors in terms of the similar questions we have of Al Rayan or Gatehouse? Have you had that similar pushback?
We haven't seen that similar pushback from consumers, because what surprises them is the reverse of what's happening with home purchase plans. With home purchase plans and so-called Islamic mortgages, they're saying, well, why are we paying 1 or 2% more than a similar product from a Highstreet bank? With us, they're actually getting more than the savings product at the bank. So they're actually very happy, and because they're understanding that we've eliminated the cost of having the bank in that relationship, and they are getting the lion's share of the upside. So on the investor side, investors can't believe the return they're getting, because it is substantially more than what you'd get in a savings account. And so they're very happy, particularly investors who have transferred their ISAs in, haven't been happy with the stock markets, for example, or maybe have a Sukuk portfolio. They're transferring accumulated ISAs into Nester, and they're putting it into fixed income, and they're getting better returns. So, and those are obviously tax-free, so there's tax efficiencies there. So on the consumer side, or on the family office side, it's a fantastic story, because we're the only people doing it. On the other side, which is the kitchen, how we create the financial asset, it's a slightly nuanced story, because this was best explained to us by one of our non-Muslim customers. In fact, our first customer was a non-Muslim lady who'd given us actually around about £5 million to invest in fixed income product. And it was a very interesting observation that we had, which was, I could invest in similar commercial assets, but if you're the only Islamic business doing this, Islamic finance business, that means you're going to get the cream off the crop. So on that side of the business, we're actually very fortunate, because brokers are bringing to us transactions, and we're able to filter out the transactions that we don't want to do and take the cream off the crop. And so at the moment, we're in this kind of unique position where we're booking very interesting assets which are at low LTV, so very well secured. Obviously, we take mortgage security against the asset, so essentially, people have got a high degree of comfort that if things go wrong, there's an asset behind the transaction. But we don't see the pushback, because we're in a niche market.
Okay, that's quite interesting, because for generally any Islamic finance product that comes out, the first thing people say is, but is it really Islamic finance, or is it just been remodeled or reshaped? Yeah. And the fact that it hasn't could also mean that the marketing is very transparent. Yeah. And I've had a brief look on your website as well, and on your portal. It's very clear to say that, I want this money to go to here, I want this to go to this project. And I think because of that, it's very clear to the consumer that, this is a very straightforward product, whereas a bank isn't. You don't know what goes on behind the scenes. Well,
when you put money into a savings account, you're saying to the bank, commingle this, and you're relying upon them to invest it, aren't you? And you have to then trust the credit processes and risk processes to do their job properly. With a more directed approach, you can actually go and visit the property. And because we are quite conservative, typically if someone comes to you for financing, and their property is valued at £1 million, you're not going to give them £1 million. You might give them 500,000 or 600,000. There's a buffer there, which is known as an LTV, loan to value. So if things go wrong, consumers are very happy because they know, worst case scenario, if they've invested in a property that's valued at £1 million, only maybe half of that has been financed. So even in the worst financial crisis, no property has lost 50% of its value.
Yeah.
And so that kind of gives a lot of comfort. Look, it's not all rosy, because as any new business, as a co-founder sitting on the board, I kind of see a lot of this. I'm not involved in the day-to-day management, but as a new business, there are always going to be startup issues. And one of the problems that you have in the UK is you have to offer your products within a legal and regulatory environment where tax laws are very prescribed. So yes, there are frustrations, because I would like to have many types of Islamic product based upon ijara, based upon murabaha, based upon istisna, all the range I want to have, but I can't have them. And obviously, as someone involved in Islamic financing, I want to have options, but tax laws prevent me from having options. So there are probably more frustrations in the founder team because of who we are as individuals than from the customer base, because this product isn't in the market, it doesn't exist, so they're very happy with getting something that's new. But as founders, yes, we are frustrated, but those frustrations maybe are not shared with the public, because you have to come at it from that position of knowledge of the industry, and that isn't necessarily there with everyone.
Muslims generally are very excluded in terms of the bank products that we have. Like, Islamically, there's a lot we can and can't do. And obviously in the UK, probably every single Muslim still has a bank account. Not that it's a bad thing, but to transition that away into Islamic finance or into products like Nester, where we only hold a very limited, even day-to-day in our conventional bank account, and then use everything else in our savings into, we've got Al Rayan Bank, Nester, FIDA, wherever you want to put it in. When do you think we'll see that kind of volume happening, where all the Muslims are like, we're going to use the Islamic finance products?
I think there's an educational aspect here, because I think people need to understand the alternatives, and there's a role here to be played by our respected scholars, our ulama, in kind of reiterating the point regarding riba and the evils of interest, and as we are taught in our deen. And so that's an ongoing process. I think there's a lot of awareness amongst youngsters, but also there's a lot of skepticism, as you rightly pointed out in your earlier remarks, because there's that natural feeling. I think this is where businesses, and I'll give Nester as an example as co-founder, can actually cut through some of that by saying an Islamic product is one where we've reset the equity, the fairness between the product provider and the customer. And when customers see the benefit of that in terms of money in their pocket, and how that's different to the relationship that they might have with an interest-based savings account, as an example, to pick up on your previous example, I think that's going to be the way in which we try to cut through some of this. It will not happen overnight, but just put very simply, if you are taking your example, if you are taking 2% or 3% on a savings account, whether interest-based or a mudaraba savings account, and you are doing that in that whole sort of global banking system that we've discussed, and you're comparing that against a product provider that's giving you double or triple that, and it's an Islamic structure, and there are Sharia scholars behind it, and you've heard in the masajid and in your own reading that Islamic finance should be a little bit more about resetting the fairness, so that if you've spent your life saving, you're taking more of the upside as the Rabbul Mal in my example, rather than your contract being fudged so that you're matching a high street. I think if we were to try and focus on these things, we are greedy as human beings. So if you are getting 2 or 3 times more, and the education is there regarding why we need to stay away from riba, I think people will naturally come. it's how we actually get that message across to people, which is the challenge.
So how would you get that message across to people? That was going to be my next question.
It's a difficult thing. I think you have to have a very carefully thought out strategy for that. This day and age, we're obviously fortunate that we have digital media, and you can use that to target groups in the right way, and that will be an effective way to get the message through. But I don't think there's just one solution. I think it will be a combination of education first and foremost, because I think the best marketing is where you try to explain it to people and they can understand the feeling that they're getting behind it. Secondly, I think, so your education was first. Secondly, I think the channels that we have available to us through social media and other digital avenues are great, and they should be better used to target our communities. And not only our communities, but if you think about the dawah aspect of Islamic finance, to give you the example, our first customer was a non-Muslim lady. Why was that the case? It's because actually she saw the quality of the product and how it was different to what was available, even to her as someone that was taking interest-based products. So, there's a dawah aspect where we can use Islamic finance if we're doing it by resetting that equitable justice sort of formula, for want of a better description, in a better way, where we actually can show other people that there is an alternative. There's a more ethical way to do it. There's a way that talks more towards ESG, and the S in ESG being social impact and equal opportunities. Those are the things that I think will get us noticed. I don't think we should think that we're going to be standing shoulder to shoulder with a Highstreet Bank and getting that level of penetration. Maybe inshallah that will happen, but we have to be realistic. And so these are the building blocks that I think of, that I talk to people about. And I think if we can get better and in pursuing these, we will definitely get the message out more and more. But we have a duty as a community, particularly through our scholars, to really raise that education in a much more meaningful way, to bring that practical reality into people's lives.
If you had a Mohammed Paracha sitting next to you who was 15 years old when he was writing letters to all the different masajid and all the different banks, and what would you say to him now?
What would I say to him now? You should have told me that you're going to ask that question, because I could have prepared. I think what I would have said to him was try to learn more about the fiqh aspects of Islamic finance earlier than you did. Because I think what I found, and I think what many solicitors find, and this is coming back to the career starting point of our conversation, is we kind of fumble around and learn from textbooks, and we learn from scholars if we're fortunate to sit in front of them. But we learn through experience, on-the-job training, as it were. And what I would say to my younger self would be, try and learn more at an earlier stage, so that you can maybe act as more of a bridge between Islamic principles, a secular legal system like English law, and explaining that to the world. Because I feel that that's something that has come later in my life, because I've learnt maybe more of that as a sort of reverse engineering into my career.
Yeah.
So, without having the benefit of planning, and lawyers, we like to plan, that's my answer.
Before we finish, we'll have a quick fire round. What's your favourite food?
Gosh, my favourite food has to be fish and chips.
Fish and chips? I thought it was going to be karai chicken, biryani. Favourite holiday destination?
Seychelles.
Nice. Favourite book?
Favourite book. So I have a favourite author. Probably not a favourite book, but I like reading Jeffrey Archer novels.
Jeffrey Archer?
Yeah.
I've not heard of him. No, I have heard of him.
Yeah.
I feel like he's come on BBC.
He's an ex-politician.
Oh, that's
and he decided to write books. So that's my escapism.
If you had a superpower, what would it be?
People are going to say invisible, aren't they?
People say all sorts.
I think being invisible is a good superpower.
And what's your favourite day of the week?
Has to be Jummah.
You should have said Monday because that's the name of the podcast. That's okay.
Well, Jummah is our
Jummah
Eid.
surpasses. Mohammed, thank you very much for coming on. It's been a pleasure.
Thank you.
And good luck with Nester and all your other opportunities you have.
Thank you. Thanks for having me.
You're welcome.